How to pick the right mutual fund. Imagine this. You're ready to take your finances to the next level. You've heard the hype about mutual funds and you're ready to dive in. But here's the catch. Pick the wrong one and you could be throwing your money away. What if I told you the right mutual fund could accelerate your path to financial freedom faster than you ever imagined? Stick around because today we're going to break down exactly how to pick the right one for you. The start of your journey, why mutual funds matter. Before we dive into the specifics, let's quickly talk about why mutual funds are so powerful. Think of them like a buffet. Instead of picking just one type of investment, you get a variety, stocks, bonds, and more, all on your plate. So even if one of those investments goes bad, the others might pick up the slack. But here's the catch. Just like picking the right buffet, you need to know how to choose a mutual fund that fits your needs and goals. This is where many people mess up. They get excited about the idea of investing and end up choosing a fund based on a flashy name or what their friend told them. But that's the wrong way to do it. Now let me ask you this. Have you ever been to a buffet and grabbed everything only to regret it afterward? That's what happens when you pick the wrong mutual fund. Trust me, you'll end up with a stomachache, or in this case, a portfolio full of regret. The process, what to look for in a mutual fund. Now let's talk about the real process behind picking a mutual fund. The first thing to look for is the fund's objectives. What is it trying to do? Are they aiming for growth or are they more focused on stability? For example, if you're looking for long-term wealth, you might want a fund that invests heavily in stocks. But if you want something less risky, bonds or a balanced fund could be the way to go. Ask yourself, what's your risk tolerance? You see, mutual funds aren't a one-size-fits-all investment. The right fund for you depends on your financial goals. Let's pause for a second. I know what you're thinking, but I don't know my risk tolerance. Well, don't worry, I'll get you sorted out. But first, let's keep going. Stick with me. Next up is fund performance. But wait, don't get sucked into past performance alone. Sure, it's tempting to pick the fund with the best track record, but past performance doesn't guarantee future success. Trust me, a fund that was doing great last year could be a disaster this year. The key is looking at how the fund has weathered different market conditions. Was it resilient during a downturn? How did it perform during a bull market? You want a fund that can adapt, not one that relies on luck. And if you think you've got this covered, hold on. There's one more key factor you must consider that most people overlook, and it could be the difference between financial freedom and failure. But before we get there, let's talk about the next step. The key hidden fees and expenses. Here it is, the thing most people forget when choosing a mutual fund. Fees. You may think, oh, it's just a little management fee here, a few percentage points there. But trust me, over time, those fees eat away at your returns. Some funds have fees as high as 2% per year. While that might not sound like much, let's put it into perspective. Over 30 years, that 2% could cost you thousands of dollars. Money you could have been reinvesting for your future. The trick is to find a low-cost fund with a solid performance history. The lower the fees, the more of your money stays invested. You know, when you think about fees, it's like paying someone to take your lunch when you're starving. You wouldn't do that, right? Why let fees eat away at your financial growth? And here's the secret. Look for index funds. They're low cost, efficient, and track the overall market rather than trying to pick specific stocks. They're like your best friend in the world of mutual funds. Trustworthy, consistent, and never trying to overcharge you for premium services. But there's a trap here that even experienced investors fall into. And if you fall for it, it could cost you big time. I'm about to reveal exactly what that is. But first, let's take a quick look at the last thing you need to consider before you make a decision. The ultimate test, aligning funds with your financial goals. The final step is aligning your mutual fund with your personal financial goals. Whether you're planning for retirement, saving for a down payment on a house, or just looking to grow your wealth, your mutual fund should match your time horizon and risk tolerance. If you're in your 20s or early 30s, you've got time on your side. A more aggressive fund might suit you. But if you're nearing retirement, you'll want something safer and more stable. Don't just buy the fund that's hot right now. Buy the one that will serve your financial future. And hey, I know you might be thinking, but what if I get it wrong? Trust me, you're not alone in this. The best thing you can do is take action, keep learning, and adjust as you go. Here's a quick pro tip. Diversify. Don't put all your eggs in one basket. Even if you pick a good mutual fund, diversifying your investments is key to managing risk and ensuring growth. Spread your investments across various sectors, industries, and asset types. Urgency and empowerment. Now that you know what to look for, it's time to take action. Don't wait. Your financial freedom is closer than you think, but it's only a matter of when you decide to get started. Take a look at your options, do your research, and choose a mutual fund that aligns with your goals. Remember, small, consistent actions today lead to massive results tomorrow. Don't let fear or uncertainty hold you back. Start now and take control of your financial future. If you found this video helpful, hit that like button, subscribe, and let me know in the comments what kind of mutual fund you're considering. I'll be back with more actionable insights to help you create the wealth you deserve.